Good morning and welcome to Almus Market Morning. Global markets swung wildly yesterday as investors juggled positive economic news, mixed corporate earnings, geopolitical unrest, and prospect of more hawkish Fed Reserve. All three indices in US ended negative. S&P 500 just avoided getting into the corrective territory of losing more than 10%. Usually fall below 10% indicates it can further lose up to 20%. Broader global markets lost more than 1% also. Investors have been so much overwhelmed by Fed hawkishness that even a GDP number at 4-decade high for Q4 21 did not help stocks, nor did news of easing tensions in Ukraine. GDP number, of course, is a backward-looking number whereas investors are trying to assess how higher rates would impact growth of the economy and earnings of companies. Also, the higher GDP number was misleading as large inventory buildup contributed in a large measure to it. Fed's hawkish tone on Wednesday has brought the dollar bulls out in force, and the greenback has made a decisive rally after being in an uncertain zone since the dawn of the year. Looking at the momentum and steadily widening rate differentials with euro and yen, a move of another 2 to 3% higher cannot be ruled out, which I would translate into about 1.1050 for the euro and USD yen to test 116.50 or 117. Market expectations on Fed rate hikes for the year has moved from 4 to at least 5 now, with the March hike possibly at a hefty 0.5%. Certainly, this has not been fully priced in the dollar. INR had a gap up move yesterday as expected, but found some resistance at the FIBO level of 74.34, where some corporate selling was seen. FII numbers continue to show hefty outflows, and their demand is soaking up many supply. Strong up move in dollar index and a new high in oil price should keep the downside limited for USD-INR for now, even as INR stakeholders await news on India's largest IPO of LIC and look forward to the shape of the budget to be presented on coming Tuesday. Thank you. Have a nice day.
Thanks, KK. Crude oil prices are taking some resistance after a relentless rise to $90 per barrel. I'm referring to Brent. Russia has kept its door open for dialogue with the US on Ukraine standoff. Both are in a conversation, both countries are in conversation. Brent and WTI are currently dealing at $89.78 and $87.17 respectively. Gold fell sharply post FOMC hawkish comment. A $1.55 fall in last 2 days may get some value buyers again in the market. Short-term higher yields post FOMC are acting negative against gold. US 2-year yield is moving higher and dealing at 1.20%, indicating that there is a more than 100 basis point hike in the current calendar year. Fed fund futures have started indicating that there is a 20% probability of the 50 basis hike in the month of March itself. 10-year benchmark yield closed at 675 yesterday, Indian 10-year bond. Today is a 13,000 crores, 13,000 crores 10-year G-Sec security auction is scheduled. If RBI has to sell this security, market would be looking for a cutoff much higher than the 675. That's the belief. There is a section of the market is expecting that the security auction will be cancelled because RBI won't be comfortable giving cutoff at those rates. Have a nice day. Thank you.